Today I'm going to talk to you about why housing prices have not gone down through the pandemic. The first reason is people are not going to be up and selling their house unless they're forced to, because of the virus. They're not going to be moving if they can help it. So, no new supply. Secondly, interest rates are an all-time low, so there is an incentive for people that were renting to buy. And I guess people that were renting in big apartment complexes, maybe they want more space to themselves. It's a regional thing as well, so I'm talking about housing prices as a whole in the United States. I'm not talking about Los Angeles and specifically. If anything, I would expect housing prices in up-and-coming regions like Idaho, for example, to go up, while housing prices in New York and Los Angeles to potentially stay the same through the pandemic, just as people are trying to get out of highly populated areas. So, not a good incentive to leave unless you live in a place that is perceived as to be dangerous. Let's see what else. Oh yes, the anticipation for inflation. So housing, the price of your house typically follows inflation. So if inflation is 3% per year, you'd expect your house price to at least go up 3% per year, if not more. So it's a hedge against inflation. So there's another incentive for people to buy houses. So there's a lot of incentives to buy that are keeping the prices up. And some of those are artificial, like the government intervention I mentioned earlier, keeping the interest rates low and propping up the stock market. In the short term, you won't see super amount of inflation, but down the line, I would expect to see quite a bit of inflation as the stimulus, if the stimulus continues. If the stimulus stops, if the money stops flowing in, I would expect to see an economic crisis, which the government is definitely going to try to avoid. So my bet is on inflation, not economic collapse. In the case of economic collapse, of course, you'll want to have some liquidity to get into investments, be it stocks or real estate. But at this point, I'm betting on inflation. So, that's where I'm at right now. If Biden wins the presidency, which it looks like chances are good that he will, yes, he's going to increase the corporate tax rate. He may increase the capital gains tax rate, and both of those would be bad for the stock market. But that's not to say that he wouldn't continue stimulus programs or, send out more checks, which does stimulate the economy. And if you haven't noticed or haven't researched it, the stock market has not necessarily recovered due to large institutional investors. A lot of the recovery has been from mom and pop investors on Robinhood. So there's something to consider. That they do drive stock prices. They do have a voice. Let's see. So there's my reasoning on why the housing prices haven't gone down. Low interest rates, anticipation for inflation, and basically the hesitance of moving out, driving inventory to be low. Those are my reasonings on why the property values have been holding strong, if not increasing in certain areas. This has been Adam with The Highest Return, bringing you a dark video. But go ahead and have a good day.